I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman, portfolio manager at PI Financial in Vancouver. His website, pifinancial.com. Welcome back to the show, Drew.
Thanks for having me on, Jim.
Over the past few interviews, we've talked about the coming Bitcoin futures contracts. Now that they are here, what can you tell us about them?
There's been a lot of hype over the last several weeks about the Bitcoin futures that were going to come to market, the legitimization that was going to give to Bitcoin, the tradability, the access, so on and so forth. And so we finally had, last week we had the CBOE, and now the bigger exchange, the Chicago Mercantile Exchange, the CME, listed and trading the Bitcoin starting this Monday. So it is only 3 days old, a very new contract, and it does take some time for contracts to get traded and get accepted. So in the 3 days that we've seen it trade, it's had very light volume, and this is a 5-coin contract, so it is large. Right now we're trading at about $85,000 US with Bitcoin around 17,000 here today. So it is a larger contract, and the volume in it maybe has been less than what people would be expecting. The first day was 1,000 contracts, and now we've kind of settled into maybe a 600 or 700 contract for the last 2 days. So not a lot of turnover, but I think why we're seeing that is, the beauty of the futures market is the efficiency that you can trade in it and the leverage that you can get in it. And we just don't have that yet because the CME and the exchange houses, the FCMs, it's the futures clearing merchants where you would have an account, are really taking measures to kind of hold themselves up against the risk of the big volatility that we've seen in Bitcoin trading. So they're putting very high margins on this. You're going to need between 75 and 80% at a lot of firms if you want to try and trade the contract. And that's even if they're going to let you. There's a lot of the FCMs that just aren't allowing it. I've heard that Interactive Brokers only allows people to trade on the long side, so you're not allowed to short it. So again, not a full market there. So we're definitely not seeing maybe the acceptance of the Bitcoin futures contract that we would have expected. But again, I will say it's very early. It's just starting out, and I'm sure some of these issues will get worked out, and with that, we may see more trading come to the Bitcoin futures contract.
One thing that's been brought up to me is that so many people are asking how to get into Bitcoin, but they haven't asked, how do I sell it right away if things start to go sideways?
And that will be one of the benefits of the futures contract is it does have a very easy way to buy and sell at any given moment, where if you're stuck buying it at an exchange right now, again, processing times and immediate saleability of it, or on the flip side of that, just being outright short. So if you haven't bought it and you want to sell it, being able to do that with the futures contract as well. So again, that will be something that I think will come with some time on the futures contract, but we're not quite there yet. It does have liquidity, but like I say, the volumes have been low. So there's going to be a little bit more time to watch and see how it develops.
Has so much attention been paid to Bitcoin that other things that maybe people should be looking at have been ignored?
I'm not sure. I mean, I've heard the argument that, the precious metals have maybe been ignored in the fact that, the Bitcoin is the new sort of millennial gold. When gold had its big run up and its huge moves, it was the, just in case sort of investment. And again, price builds on price, and gold prices did better and more people got excited about it and you had tremendous price runs. But as we've seen, Bitcoin's price runs, especially in a percentage terms, have just been incredible. So it is definitely getting a lot of attention. But I don't know how you would go about saying, it's taken $1 billion or 10 billion or 100 billion, given the size of the market cap of Bitcoin. You can't say it's pulled that directly from another market. Millennials do seem to be more willing to, say, buy Bitcoin that's been screaming higher than buy, quote unquote, an overvalued stock market. But again, to actually quantify the amount of money that it would be pulling away from other assets would be very difficult, I think.
Now, a lot of traditional traders have stayed away from Bitcoin because to them it screams .com bubble from 2000. What's your opinion on that?
Everybody's seen the charts going around. I mean, the move has been incredible. It's been parabolic, I would call it, over the last several months, which again never seems to be sustainable. Things don't tend to, as we've ever seen, go parabolic and then correct by going sideways. They make very sharp turns at the top and then become, a fraction of what they were once worth. So that is evident in several, quote unquote manias, over the turn of time, I guess, to go way back to even the tulip crisis that it's been compared to. So I think it's been, traditional traders. We have a lot of markets that are moving a lot that we think we understand or have some reasoning to understand and believe the fundamentals, where I think there's just been a lot of people that, don't fully understand Bitcoin, and if they do fully understand it, don't think that it's a plausible scenario or case, or that the fundamental argument behind it has the rationale to take it to where it is now in terms of, market cap, to put that term on it, or the size of the Bitcoin market, which is fair. I haven't traded it myself. I haven't traded the Bitcoin futures even, prepare or just waiting to watch, to see what happens there. So, yeah, it has been something more traditional traders have stayed away from, and it's made, the younger people that have traded it or have traded it in size or got in size, incredibly wealthy. So you have to say, good on you guys for doing that. But at the same time, I think people getting in now may feel like you're chasing it, and again, all the reference to the mania that it is. Again, they usually tend to turn sharply and end in tears. So nobody wants to participate in that side of it. So we'll have to wait and see what the coming weeks and months bring in that front. But it's definitely been something that, you're right, more traditional traders have tended to shy away from.
Going on to the Chicago Exchange, has it given Bitcoin legitimacy?
Again, that's been a lot of the talk as the futures exchanges were being listed. It's being listed now alongside a barrel of crude oil or an ounce of gold. So, yes, it is maybe more recognized. I don't know that it is necessarily a legitimacy play. I mean, the CME always prides themselves on being a place where you can come to hedge risk, and there are definitely speculators in that same marketplace, but again, sort of a place where farmers and producers can hedge their risk in commodities or all the listed contracts that the Chicago Mercantile Exchange offers. So they're not trying to come out and say, what is legitimate, what isn't. They're just trying to say, is there a need for people to, yes, speculate, but also possibly be hedging what would be the underlying commodity. So it's maybe more recognized, but I don't know if I would use the term, legitimized by the CME.
Well, I have to say Bitcoins are a whole lot more sexy than sow bellies.
That they are. You don't see that too often on the front page of the newspaper.
We'll have more with Drew Zimmerman right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, apart from Bitcoin, what else has caught your eye as we head into the new year?
Yeah, as we wrap up 2017 and heading into 2018, everybody's always looking to see, what is the surprise we don't see coming, and of course that in itself kind of takes that surprise out of it. But I'm really noticing here this week, especially that interest rates could be a key market as we go into 2018, especially if we see interest rates make bigger moves. So we've had the U.S. 10-year just break out of to the upside, so rates moving higher out of what's been a pretty tight 3-month range, and interest rates just have such a wide-ranging impact on so many different markets that if it really starts to move, the effects will be felt all over the place.
One of the good things if interest rates go up is maybe perhaps people can start making some money on their savings accounts.
Absolutely, and we are seeing those rates starting to move up. Of course, they always move up a little slower as the banks like to pad their cushion first. But to take some risk-free capital and rather than getting next to nothing for it and starting to get even a few percent a year will make a big difference, especially as you've got a lot of the baby boomers moving into retirement or already in retirement and wanting to have safer capital returns. So that'll definitely be a welcome side of higher rates.
And also, so many people have predicted that we're likely going to see some kind of correction in the new year. Isn't the art of wealth so not much making it, but being able to keep it when things go down? Exactly.
The detriment that you receive if you're part of a 20%, 30%, or in the case of 2008, a 50% correction, it takes an incredible amount of time to work yourself back from that, and especially if you are, at a later stage in life, to be able to have the time and or the risk tolerance to come back from that is just not in the cards. So if you're able to come out of the S&P, which, yes, has had a 20% year or 23% year, I think, if you include the dividends. If you're able to take some of that and put it somewhere that, isn't as impacted, I guess, by stocks going up or down, or, again, just, reallocating some of your product mix to be in some of the safer assets and actually get a return on them rather than going to cash and just having that cash do nothing. So, as we go into the new year, again, it's been a very low volatility year for stocks so far. For anybody that's been invested in that space has seen great returns. So, maybe taking a little off the table and doing a little reallocating makes some sense.
Of course, when it comes to higher interest rates, that's going to hit real estate, maybe bring prices down.
Yeah, that's another big area. And, of course, in Canada, it's been a big part of our economy, especially in Vancouver and Toronto. So real estate it's a very levered game. And when you're taking on a huge amount of debt at very low rates, it's very easy to make your payments, especially if the asset that you're buying continues to go up in value. It's just a levered bet that's working very well. So it feels great and it makes everybody happy. But now, the cost of carrying that levered bet, it doesn't mean the asset has to, stay the same or go down in value. Assets can still go up, but the carrying cost of having that trade on will go up. And then as people have to refinance their mortgage, maybe they can't buy that expensive house that they used to be able to afford. We do have new mortgage rules coming that, again, will impose a higher rate than the overnight rate is or already. So again, just an added sort of hurdle on top of that. So if rates are moving up with that extra stress test rate increase, maybe the purchase price stops getting, pushed higher as you have all these buyers coming into the market. Maybe the buyers are restricted in some degree. So it could be a very interesting time if we see rates really moving higher and, the government taking measures to try and cool or stabilize the housing markets, especially in Vancouver and Toronto, to see what will happen with prices. And again, that's always the hard thing with the economy is there's never just one piece in the puzzle, and you kind of build the puzzle as you go and see what happens. You have to be reactive. So it'll be interesting to see what happens to, especially in Vancouver and Toronto, again, the housing market and the housing prices and, things like turnover and such as we go into the new year.
We'll have more with Drew Zimmerman right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Drew Zimmerman. Drew, what will the impact of higher interest rates have on gold and for gold prices?
Yeah, I think the interest rate market definitely is tied very strongly to gold, and more importantly, the real interest rates as they're tied to gold, or the inverse correlation to gold. So if real rates are moving higher, then gold normally moves lower, and that tends to be a very reliable correlation over time. So if we do have interest rates moving higher, as I think they may into the new year, and as we've seen lately, inflation is struggling to get off the ground. That means real rates are moving higher. And if you look at the U.S. 5-year TIPS market, we're back near multi-year highs on that. So that would be an example of a way to look at real rates. So if that market is moving higher, it implies that we should be seeing pressure on the precious metals. And we did see both gold and silver trade much lower through, call it mid-November till the beginning of December, that sort of time frame. And they've really bounced back here in the last 10 trading days or so, while real rates and interest rates have moved higher, which is opposite to their normal correlation. So it's a time where I'm looking at the precious metals and seeing, is there something that I'm missing? Because again, with a traditional driver of real rates, it seems that one of the markets is wrong and mispriced, and there can be an opportunity in that. Or is there something else going on in the gold price that I'm just not seeing right now that explains why gold and silver prices have moved higher over the last 10 days when, in fact, I think they should be moving lower? So if you take into account the U.S. dollar, yes, it has softened over the last couple of days, but again, in broader sweeps of time, the U.S. dollar isn't providing that big of a difference in where the price is now compared to where the real rates are. An example that I've got just over time, over the last several years, when we had the real rates back at their highest levels at the end of 2014, gold was at $1,200. The dollar index was at 90. So again, it was moving up in that strong bullish U.S. dollar time period. At the end of 2015, gold was at the low, 1050. That was largely our big low in the gold market. And the dollar index was higher than where we are now. It was at 98. So now with gold at 1270, the dollar index at around 93, the dollar may have a little bit of an impact, but again, if we've got real rates at those same kind of 2014, 2015 end of year levels, it's implying maybe that, gold should be somewhere between, 1200 and 1050, which is much lower than where we are now. And again, these correlations do break down over time, and there can be other influences, but that does tend to be, almost a gravity, a weight that can be on a certain price. So I think, gold prices may have a little bit more pain if interest rates move higher, and I think that should give us U.S. dollar strength as well, which doesn't help the precious metals. But I do think that we will start to see inflation, and I think that's when you see the longer-term bid come back into the precious metals. And, if gold is able to hold the $1,200 mark, if it does see the pain that I think it could see from higher rates, then I think inflation does start to turn. And again, I think that is going to be a key going through 2018, and that will get the Fed moving. But again, I think inflation could run faster than what the Fed is ready to move for. So again, Fed keeping their gradual policy in place. And if inflation is running faster, then real rates start going the other way. So they're at this multi-year high. Maybe they turn lower from here. That gives us a much better reason, in my mind, to be on the longer-term bullish side of the precious metals. So the view is, interest rates are going to hurt a little bit more at first, but then the inflation that comes around will be the long-term sort of bullish play on the precious metal side.
Drew, thank you so much for chatting with us.
Thanks for having me on, Jim, and happy holidays, and I hope you have a great new year.
Best of the season to you and your family.
Thank you. My
guest has been Drew Zimmerman. He's a portfolio manager at PI Financial in Vancouver. His website's pifinancial.com and polarfuturesgroup.com. You're listening to HowStreet.com radio. Questions can be emailed to info@HowStreet.com. I'm Jim Goddard. Happy holidays.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.